Welcome to Multiple Perspectives. This is your weekend view, where we bring you the latest insights and trends in real estate investing. I'm Daniel Brereton. If you've been on the EquityMultiple platform before, you've likely looked at one of our investment offerings. And in each offering page, there are several projections and numbers for what returns could potentially be achieved. But how do we arrive at those numbers? Today, we're going to focus on a critical aspect of CRE investing, which is forecasting and pro formas. These are tools which are essential for investors to assess potential opportunities and manage risks effectively. I hope you'll be able to see how these elements shape the decision-making process in CRE and what investors should be paying attention to in the current market environment. Forecasting in any investing involves predicting future market conditions, rental income, and property value. Accurate forecasting is crucial as it helps investors project cash flows, estimate returns, and understand the potential impact of market fluctuations. For instance, when forecasting future rental income for a property, factors such as market demand, economic conditions, and interest rates must be considered. Given the current economic climate, with inflationary pressures and fluctuating interest rates, these forecasts can become complex, but they still remain vital. As Dwight Eisenhower stated, plans are useless, but planning is indispensable. Our real estate team uses both historical data and current trends to assess the various scenarios for a real estate investment. Pro formas are the financial projections of a property's future performance. They are essential for assessing the viability of an investment by estimating revenues, operating expenses, net operating income, and finally, cash flows over a specified period. A well-prepared pro forma includes assumptions about rent growth, occupancy rates, and capital expenditures, which offers a snapshot of potential returns. But a plan is just that. It's a plan. No one has perfect forecasting ability, but a better expectation is that the underwriting or projections are done rationally, conservatively, with awareness of potential risks involved, and, more importantly, how we mitigate those risks. The pro forma projections also help to set a baseline for the range of returns that an investment could potentially generate. Good investors will look at the assumptions, challenge those assumptions, and see if it holds up to a stress test. Each of the investments on our platform has gone through a rigorous due diligence process. Less than 5% of investments that we review make it to the platform. We have an open investment committee that challenges each other to see the various sides of the investment and attempts to find those that pass muster. It hasn't gone to fists yet, but it certainly gets pretty heated. There are lots of investments available in the private markets, so it's important more than ever to understand how the projections are made and what goes into the due diligence of the investments that you're reviewing. There are lots of investments available in the private markets, so it's important now more than ever to understand how the projections are made and what goes into the due diligence of the investments that you're reviewing. As the director of the investor relations team, my primary purpose, along with my team, is to have conversations with you, the investor, as you explore our platform and assess the opportunities available. If you're interested in learning more about our current offerings, visit our website at EquityMultiple.com or check the show notes. As always, you can contact us with any questions by emailing ir@EquityMultiple.com. Thanks for tuning in to Multiple Perspectives. Join us next time for more insights into the world of real estate investment. Have a great weekend.
This communication is not to be construed as an offer to sell or the solicitation of an offer to buy any security or provide investment advice. Any such offer or solicitation can only be made by means of the delivery of a confidential private offering memorandum. To the extent that performance information is contained in this podcast, past performance is not necessarily indicative of the future results, and all figures are estimated and unaudited unless otherwise noted.